All right, folks, let's talk a little bit about what we have going on here on screen. This is a new tool that I've developed that helps to visualize the options market and its impact on the futures market. So, this is pretty cool. This is software that is coming out, I think, this week. Been working with the development team over at Bookmap to get this all ready. And so this is pretty cool because what you're seeing, and I can zoom it out a little bit, you're seeing on the very right-hand side, this column here is showing the impact of positioning and flows, where they are on S&P futures. So if you didn't know, the S&P 500 options market is the most important options market in the world. It is trading anywhere between $1 trillion and $1.5 trillion every day. So when we look at these different areas of positioning and flow in the options market, it actually helps us to ascertain where there is potential to gain some alpha, to gain an edge on multiple different time frames. So right now we can see it's a pretty balanced day, right? The two most active call strikes and the two most active put strikes are within 20% of aggregate volume from each other. So what does that tell you? It tells you that there's not a lot of huge impact coming from the options market, right? Because the distribution of these flows is pretty even. So that's not a bad thing, but it means that we're in a market that is more in balance than in action, right? So if we look at classic auction theory and we apply it to options, we can see that the current dynamic in the market with a pretty even distribution of volume across these options is one of a market at rest, which is why we're at that midpoint. So let's talk about the midpoint. What does that mean? The midpoint is the area that balances between the puts and calls, right? So we take those strikes, we find the midpoint between them. And what we're doing is we're saying, okay, volume is relatively balanced, right? They're within 20% of each other. So we're going to create a midpoint to show where price may get magnetically drawn towards. And that's exactly what we see on screen, right? You can see that midpoint has been a magnet for price. And guess what else? The midpoint lines up with both the point of control and VWAP. So you can see that there's reasons to say that there's convergence here, and that convergence can increase our confidence that this is a pretty important level. Now, next to the hot call on the right side, you do see that little plus. What that's telling you is it's the most active option on the chain right now. That level, that strike, is where there's a lot more activity. But then you can also see when we add up the hot call and warm call, and we have 62,000, and we add up the hot put and warm put, we have 62,000. The volume is pretty evenly distributed. So what is that telling you? Well, it's giving you a sense that we're in balance right now, that the options influence in the market is pretty muted. So let's zoom in a little bit more. We can also see that we're at this key gamma level. That's the third largest gamma level on the S&P options chain. It's important to be able to visualize this stuff because you can see, we're bouncing off of it over and over and over again as we sort of build acceptance. And that helps me because when I'm seeing this, I can tell, okay, I know the market's going to consider this to be an important level because of where dealers are positioned. I can also see that there has been some real distribution. So going into Bookmap, I can see the cumulative volume delta is showing there has been some selling here. And it hasn't been from large passive sellers. Icebergs are flat, stops are flat, so it's not like small traders are being pushed out here. What we're really seeing more is that there's just steady distribution, okay? And options are suggesting to us that for now, this area around 49.49, 49.50 is in a pretty important level for intraday price action, as is climbing above this gamma level around 49.51.50, right? So if we can actually make a decent push here, we could probably see buyers try to make a run higher here to that warm call, where we can see there's also a fair amount of resting liquidity around there. So this is going to be pretty interesting to watch. Right now we're building some acceptance. We're seeing, that gamma level go from support or go from resistance to becoming now support. And I think that all kind of gives us a sense as to that's reinforcing the importance of what we're seeing on screen. And I have all the different futures contracts lined up on my Bookmap because when I'm trading, I like to look at what's going on across different markets. Like, look, the NASDAQ just made a new low. So what is that telling you? It's telling you momentum is favoring the sellers here on one of the most important momentum-driven markets, right? If the NASDAQ is selling down like this, that typically is going to drag the S&P lower. So let's just take a look at the bond market. What's happening in the 10 years? Because this was pretty important earlier. We can see it's come off its lows. There's a little gap from when I had my machine powered off. I was rebooting. But you can see it's come off its lows a little bit. That's helped the market, but it's still, quite a ways lower. The bond pricing is quite a ways lower from where it was before what we saw from JOLTS. JOLTS is pretty important today. Let's go back to the S&P. We can see that, like the NASDAQ, it is pushing lower again here. It's getting below gamma. I'm thinking that given what we're seeing in the NASDAQ, how it's continuing to grind lower and there's some decent liquidity below it, that we might see similar price action from the S&P here. We could take a look at the heat map too, kind of gives us a sense as to where the buying and selling is today. And there's a pretty good amount of distribution overall. UPS is lagging. It didn't do so well today, down almost 8%. Texas Instruments down about 2.5%. Apple down about 1.5%. NVIDIA bid up. A lot of call buying in NVIDIA today. And that one is bid up about 1.5%. But yeah, S&P now making an effort to make new lows, kind of mirroring what we're seeing in the NASDAQ. NASDAQ making another new low here. And so let's pay careful attention to sort of some of these price discovery dynamics that are playing out, because it does feel a little more heavy now that we have this downside being realized here. So the way I'm going to look at it is if we can cross below this midpoint, which is also VWAP, then I think we can actually see the sellers start to take control here. Now, there are a wide variety of positioning outcomes being expressed here. So you've got the hot put just below spot around 49.46, right? So seeing that price realized, which is right around the point of control, more than likely we do see that happen. Now then we've got this resting bid at 49.40, and that's been on the book for a bit. You can actually see that the liquidity above is thinning out. The liquidity below is beginning to thicken up. That typically tells you when trend is your friend that we're going to move a bit lower here. And indeed, trend is our friend here, right? We've got price action moving lower. Then finally, we've got the second most active put down here at about 49.26. So about 26-point delta between SPX and ES, right? That changes as we get closer to contract roll. So that suggests that this is another area we're going to want to watch pretty closely. As price pushes lower, it is likely to get drawn to this area, sort of like a magnet, because of auction theory, because of the market wanting to transact. So we do see that pull now. It's pulling below VWAP. It's testing the point of control. It's testing that midpoint level now. And I would just be looking for this, first the hot put price to be realized around 49.46. And then a push lower here to absorb this liquidity around 49.40. Now, whether we're able to get much lower, this warm put around 49 or what would be 4,900 SPX, that's a little bit of a different story. We need to see whether there's some real momentum that gets unlocked here. And we'll see that. We'll see that based on some of the stops and some of the iceberg action as well as to where the flows are going. But now we're getting down to that hot put level, testing midpoint and seeming like we want to fail it. That hot put just below the point of control. This is where we start to see a little bit more interaction between these options levels and the market as well. So we'll just zoom in a little more here. We can see resting liquidity building below a bit, a little above, but more below, and thickening up as well. So this is a market that wants to buy S&P futures, but buy them at a lower price. And there still is that distribution, CVD, negative 11,000. Really, from 12.15 on, you've seen just a steady distribution of S&P contracts. Yeah, I imagine that it is a bit off-centered. I'm sorry about that. I'll see what I can do about the mic. So let's see here. Well, we've got it's just continuation of this same move, right? We're going to zoom in a little bit more to the microstructure. You can see it's lower highs, lower lows. It is a downtrend in this very short time period. And we're getting some continuation there. And we're at that hot put strike. We talked a little bit about that earlier, that I felt we could pull down there. We are getting that pull. We're seeing the liquidity increase below us more, even more so. We can see some of that appearing on the heat map here. And again, it's becoming more likely that 49.40 is the next destination for price. If we grind through there, I'm going to be looking very closely at this warm put to see if it becomes the most active strike, because that could become that downside target based on the way the options market is trading right now. Folks, if you have any questions, feel free to let me know in the chat. All right. So now we're seeing that bid increase in size. Now 578. Remember when it was just under 400? This is really an interesting dynamic that's playing out here, because we're seeing that momentum reversal, and we're seeing it on account of being able to map out some of these key levels here to say, okay, now this matters. We push below gamma and midpoint. We're getting pulled back up to that most active put, but it does seem very likely 49.40 is an area to watch. Pulling below that, I think, will open up this next level of interest at 49.26 ES. So let me know if that's any better on the mic balance. I tried to make it even on both channels. And if anyone out there has any questions, let me know. I'm going to be popping on YouTube more often to do some streaming here and there, show off this software I've written. That's what this whole options column on the right-hand side is. It's based on a plugin that will be available on the Bookmap Marketplace. Should be this week. Pretty exciting stuff. And I know I haven't been on the YouTube a lot streaming, but that will be changing. Also, every Tuesday at 9 a.m., I'm doing a stream on Bookmap's YouTube that you all should check out as well. Thank you. Appreciate that. So here we are. We are still in this sort of area of decision getting pulled lower. I think that the market's microstructure is giving us a sense that, again, trend change, lower high, lower low, lower high, lower low, doing a little consolidating here. But I do think we get pulled lower. We can see more liquidity building right below us here. It's just enough that it probably has a bit of a magnetic effect. And we do have a nice little bid coming back into crude here. I'm just going to pop over to that screen. Yeah, this has just been a nice trade all day long, just been grinding higher and higher. And this is one of the reasons I'm bullish on energy stocks, because I just think crude is mispriced here. Breaking above 76 makes it technically bullish. Looks like it's putting in a reversal bottom. So here we are. We're now doing kind of what we talked about earlier. We broke below some of these key levels, right? VWAP, midpoint, the gamma level, point of control, the hot put. These are all areas where buyers had an opportunity to try to defend price, and they did not. So that's meaningful. Each one of these levels is an important area to watch. And if we break below 49.40 with all this liquidity down here, I think that does give the sellers a little bit more determination to try to push this thing lower. And again, looking at that warm put around 49.26, if that happens, is the next downside. So that would be juicy. That would be like, another 14 handles lower. So we can take a look at rates as well. We can see pretty stable after that move lower, sort of finding some balance here in rates. Gold actually coming off of its highs. It looked a lot better earlier on. We can see that dump here that happened after jolts. Gold just absolutely puked as rates in the dollar moved higher. And we can take a look at the euro. The euro is interesting to watch for the same reasons, right? You can see it did take a bit of a pounding after that data release, the stronger than expected jolts data. And it seems to be balancing sort of like rates. This is one of the things that's pretty cool about Bookmap too, is that you can really get a sense as to what's going on in the microstructure, in the liquidity across multiple markets at a glance. And one of the things about the way that this data impacts the auction during the day, you have to be patient. It doesn't just happen all at once. It's more like drip, 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 go. You know what I mean? It kind of builds up to this crescendo moment. So if we do slice below this liquidity, I think the selling may accelerate a bit. But we do have to be patient, because this is, today is not a market where there's a lot of conviction, right? You've got much more happening after hours with Microsoft and Alphabet tonight than you have during the trading hours. Jolts was the biggest jolt for the market today, but I don't think we can expect a lot more movement. Now, as we get into the end of the day, we do have more of those supportive flows coming back in as dealers are changing their hedges to account for the decay of the volume of some of these SPX puts that people have on as hedges. So you could get a little bit of a boost from that, or at least it could reduce the downside pressure in that final hour and a half of trading. Right now, we're sort of in the lunch hour, and while people have stepped away or are taking a break, you get this sort of price action going on where you get a little bit of continuation. Now, let's take a look at this right here. See this 2432? That was a big passive sell. You could see the iceberg pop lower there. Someone large was distributing into that in size, hiding their true order size until, you know, the event is basically done. Then it picks it up here when it's of enough size. Why does that matter? That's pretty chunky to offload 2,400 S&P contracts into weakness. You can see the liquidity below us is building too. If it gets chunky enough, sometimes it can become what is kind of called like a wall, or like a floor, right? If you get this kind of liquidity and it gets big enough and the market starts to run away from it, you can have the opposite play out. Rather than kind of it getting pulled in and pulled lower, you can actually have a situation where it bounces off of that. And how the market reacts to this liquidity is really important to contextualize what's going to happen here. Are we going to get a pull down, lower breakdown type of situation below 49.40, extending that selling, or are we going to reverse? So I think like how this level plays out is going to be pretty important. And to me, I would look at a move lower by 5 points as saying, okay, we've broken below that level. That's no longer an area to really watch that closely. In terms of deciding where the market wants to go near term. Similarly, I'd say if we start to push above that point of control again, especially with some vigor on the buy side, like you see some increasing contracts, or as the way Bookmap shows it, larger bubbles, that'll tell me that buyers are really taking control here and defending that lower level. So let's see how this plays out. Remember that the S&P, a lot of the price action you see in the futures is driven by the options market. So having that options data on the right side is really helpful as well, because you can see, again, we're kind of getting pulled back towards that most active put strike, which makes a lot of sense. So far buyers are defending that lower level. Perhaps it's going to act more like a floor. You do have over 1,000 contracts there, so it is pretty chunky. My basis for looking at this as a reversal would be seeing it push higher above the midpoint, which would include the point of control and VWAP, with some decent volume. I'd really like to see some volume build into that move. But for now, I'm going to flip off the stream. I'm going to pop on occasionally. You'll get notifications, so be sure that you're set up for notifications so you can see when the stream goes live. And I'll be doing these more regularly, and then I'll start setting up a schedule so y'all can plan to join me and we can talk markets and more. So thanks for joining me. I'll catch you soon.